Let's bring in Dan McClory, the Managing Director, Head of Equity Capital Markets and Head of China at Boustead Securities. And here in studio with us, David Nelson, Chief Strategist at Belpointe Asset Management. Gentlemen, thank you for being with us. And Daniel, we've discussed this before because the math here is that China exports to the U.S. far more than the U.S. exports to China. Just last year, China shipped around $505 billion worth of goods. The U.S. sent $130 billion worth of goods back to China. So China's going to hit its limits of what it can impose tariffs on way before the U.S. does. How else do you see China retaliating?
Well, I think, first of all, China's already backed off a little bit because last week when President Trump announced up to $200 billion in additional tariffs, they only countered with the $60 billion number, which is about 40% of their goods coming into the U.S., and we're about 40% of goods that are being taxed that are heading into China. So what I think is important to remember, Michelle, is that there are areas like services, there are areas like travel, there's areas like education, which are kind of not generally factored into the retaliatory measures that could be taken. And those are all three areas that I think China is in a position to do something about. Whether they will or not remains to be seen. Again, I call this all a big negotiating game, and each side is trying to get more chips on their side of the table. David, what do you think? How do you see China responding?
I think President Xi is going to watch the election here. I think he's going to see if the House or Senate flips. And if it does, then he'll view Trump as somewhat weakened, and he'll ratchet up the rhetoric. He'll, be the tough guy talk. But he brings up an important point. The math problem is clearly there. They can't match dollar for dollar, but it's not like they're without weapons. Currency is certainly a weapon. They've let the yuan slide dramatically, but that's a double-edged sword. That's capital leaving the country, and it also squashes their plans to make that a reserve currency. So this is ongoing. It's tit for tat, and this is not the end of it.
So, Dan, we've got Chinese stock markets. In the meantime, they're deep in the red, and keeping in mind that the majority of trading in China is retail investors. It's mom and pop trading in the market. Now, we know that President Trump likes to watch the U.S. markets as a gauge of policies. Is this something you think President Xi is looking at as well? Because the Shanghai Composite is down around 17% year to date.
Most certainly. And as you point out, Michelle, the Chinese stock market is somewhat of a barometer of confidence and the economy. The government has always stepped in and intervened, so it's created the perception that you can't really lose money in the Chinese stock market. But when you and I talked about this back in the summer of 2015, and there was that incredible crash, we saw, and investors saw, that that's not the case. So essentially, the Chinese stock exchanges in Shenzhen and Shanghai are the worst performing this year. The U.S. exchanges are among the best. David talked to the currency devaluation. The yuan has been in such a steady decline. Again, it's probably the worst performing Asian currency this year. So I definitely think that that's a barometer of retail sentiment and confidence. And it certainly factors into Mr. Xi's negotiating responses, because he wants to be very careful that there is no domestic unrest as a result of some of the ripple effects of this trade war.
Dan, as you said, we've spoken before, we've covered a lot of topics, and you do business regularly in China. If China does retaliate against U.S. companies, it's surely going to spite its nose to cut its face, because it's trying to establish itself as a more friendly business environment. How do you think it would impact foreign investment?
Well, it's going to have the effect of basically shifting global supply chains. So supply chains, I think a lot of the production and manufacturing of component parts will remain in China, but their final assembly is going to occur elsewhere in an effort for multinationals to kind of rebalance their supply chain. So this will definitely be a trend. It's already started. It's also been started for reasons of lower costs. China has started to be driven up in terms of costs of blue-collar labor, and that's something that supply chain experts the world over recognize and understand. So I think that you're going to see that as a general trend, but I also think that the effect of the Chinese tariffs and what's happening in the U.S. is really overblown. The U.S. manufacturers have received a great windfall in the form of tax reform of late last year. That's kind of priced into their balance sheets, their P&Ls. And, you know, the last study I saw, it said the average cost on a car of the steel tariff is about $112. So these things are really greatly described, but I don't think they're near the magnitude that we'd be led to believe.
And David, we know that in Chinese culture, losing face is paramount. You cannot lose face. What kind of deal can the Chinese and the U.S. come up with? Because all the big investors think they're going to come up with a deal eventually. What kind of deal would allow China to save face and level the trade playing field for the U.S.?
I don't know if there is one near term. And if you're looking for a report card right now, the markets are clearly it. You just talked about it. You know, their markets are in a secular bear market at this point. We're hovering at all-time highs. So I think Trump feels pretty emboldened at this point in time. I think I'll take a...
He's facing domestic pressure. He's not being given the room and space.
It's also not being reported in the Chinese press as well. You're not hearing a lot of rhetoric about the falling stock markets there. It's barely covered in the news, the nightly news. We're covering it here a lot more than they're covering it over there. So, yeah, I don't think he wants to lose face, but he's got his 2025 doctrine, and he doesn't have the same challenges that a U.S. president has. He doesn't have to think in terms of an election cycle. He's there for life. He's got time on his side.
Right. One of the obstacles, though, is that mountain of debt that China has. We'll have to get into that next time. Dan, thank you so much. Dan McClory. David, stick around.
Thanks,
we want to get your take on Tesla coming up later in the show.